Hey everybody, welcome to Home Loan Basics. I am Cedric Stewart, your host, and today we have the pleasure of starting our series off with the mortgage gentleman, Greg Lewis from Fairway Mortgage. Hello, sir. How are you?
I'm good, Cedric. It's a pleasure to have to be on this show. Thank you for having me.
Yes, the pleasure's all mine. We got a lot of stuff to dig into because, as I'm sure you know, there are so many myths, truths that are not
Absolutely.
true, misinformation. There's so much to dispel about what people can get, what people can't get, in regards to home loans. And with rates being what they are now, historically low, I thought it would be a good idea to bring in a professional to just help us, swim through all of this muck and find the truth and
Yeah,
get good information that people can use because,
absolutely.
you know,
Absolutely. Yeah,
people need the right stuff. So
yeah,
in today's episode, we want to talk about some of the information around conventional loans. Specifically,
yeah,
we were talking earlier, and one of the things that I've always encountered when I talk to my clients, my home buyers, and this is for first-time home buyers, this is for people that have bought a home, and they need to. Well, what happens when you need to sell your home and buy another one, right? You still, in most cases,
yeah,
you need a mortgage, and a lot of people just don't know that you have options when it comes to conventional loans. Everybody thinks FHA, and then
yeah,
so there's not enough clarity there.
yeah,
And if they do go conventional, they're like, well, I don't have 20%. Hey, that's maybe you don't need 20%, right?
yeah.
So that's the biggest thing. That's the first thing I want to talk about. So uh, first of all, and make sure I properly introduce you. Greg, tell them where you're from
Yeah.
and all that.
Yeah. So I'm Greg Lewis again, a loan officer of Fairway Mortgages. My office is right outside of Baltimore, Maryland, in Towson, a small county called Towson, Maryland. I've been in the industry for a number of years, and the company is I like to call it a hidden gem, meaning that a lot of folks don't know about Fairway, but we're actually the fifth largest lender in the country.
Whoa, you say fifth largest lender in the country?
Fifth largest lender in the country.
Okay.
Uh,
Well,
so
I didn't know that part, but I did know that Fairway was solid, which is why I thought that, you would be a good person to talk to about this particular topic.
yeah, well, I appreciate it. I appreciate it, Mr. Stewart.
Yeah. And I know that, you know your way around real estate. You
Yeah,
grew up in real estate, you own investment property, so you can speak to this from multiple angles.
yeah. Awesome.
All right. So let's dig right in, man. The first thing is I got my little list here. So people believe, or they've been told by others that don't know, that you got to have 20% to get a conventional loan.
That's completely false.
Hmm.
Completely, absolutely false. That is one of the big myths that I hear when approached by clients, just either exploring for information or they're trying to go the conventional route. 20% down payment is strictly only is only required if you're looking to remove private mortgage insurance on the loan starting out.
Okay. And for those that don't know, that's PMI, also known as MIP, depending on who says it. But so that's in order to remove that. But considering the other benefits associated with conventional loans, maybe taking on some private mortgage insurance isn't the worst thing in the world because it is
Yeah,
insurance.
yeah. No, private mortgage insurance is not the worst thing in the world. Only because on the conventional route, it falls off after 20% equity. And I believe, for at least from what I experienced, that's probably why the myth is what it is, having to put down 20% because it's associated with the dropping off of the private mortgage insurance. Right?
I see. I
Now,
see.
now there are requirements for down payment, of course, for each type of buyer,
Sure.
but we can get into that when you're ready.
Okay. Yeah. And while you're talking about the equity component,
Yeah,
so once you reach 20% equity, then that falls off. So if the home is currently worth $100,000,
Yeah.
right? Including what you put into it, but then the home goes up to what are we talking? 120.
Yeah.
At 120, then the mortgage insurance falls off.
Absolutely.
If if
Absolutely.
if my very, very basic math is correct here, I'm not the mortgage gentleman. I'm not the mortgage
Absolutely.
gentleman, but you know.
Absolutely. It's the power of real estate, and I think that's why so many folks are looking to refinance their property right now.
Mm-hmm.
The interest rates are lower, equity is rising, the market value are rising. So you can the possibility of you just having that private mortgage insurance decreasing or just dropping off is very, very high in terms of just general information with market value and interest rates.
Right. And so as we look at that, I think we know that, we got a little less than 2 years, most likely before there is a change in a
Yeah,
shift rather in the real estate market. But if you consider the fact that if you could go into a property now with the way that the equity cycle is advancing, the way that properties are increasing in value in the DC area, there's a pretty good chance you could find yourself in a position where what you put down in conjunction with what the market now says your property is worth could put you in a position where the property has increased in equity by
yeah,
20-25% within these next couple of years. I've seen it,
yes,
especially since like the number of people that we have had that have refinanced since March of 2020 is
mhm,
unbelievable. One guy, one gentleman and his wife, they closed in March, very, very much at the beginning of all the stuff. And then I talked to them just before Thanksgiving and I said, hey, uh, what you got going on over there? You been thinking about it? And they said, well, I got this notice that says my property is now worth X. And I'm like, this is way more than you paid for it. Like that
yeah,
kind of increase in 6, 7, 8 months is crazy. And then I
yeah,
just gave him a list of people to talk to, to
yeah,
talk about the refi. He said he's gonna talk to his family. So it's really within reach. And
yeah,
like you said, it's not the worst thing in the world. So
yeah,
if you do take on the private mortgage insurance, then you can, and this is not a video about private mortgage insurance. We'll do maybe we'll do a deep dive on that at another time. But
yeah,
you know, you can get the conventional loan and it allows you to get into the property. And what people don't realize, I'll say this one thing about conventional, then we'll move forward. Because I think we'll probably have to maybe, I'll tell you one big pro of conventional loans. FHA loans
hmm,
have very specific parameters that you must abide by in
absolutely,
order to buy that property. The property
absolutely,
must be in a certain condition. You can't buy in certain neighborhoods,
yeah,
condominiums, townhomes, things of that nature. The HOA, the
yeah,
association needs to be in a certain, state of affairs. And so if you love a house,
yeah,
but you went with the FHA product and their constraints, you might not be able to move forward. Whereas if you went conventional, you would be able to do so, thereby increasing the strength of
yeah,
your purchase power because you're
yeah,
not
yeah,
restricted by those parameters set by FHA. And so the seasoned real estate agents, the seasoned sellers, and if you're buying a property from someone that's, an investor that flips homes or something like that, they all know that
yeah,
conventional loans are stronger in certain ways. And I'll give you one perfect example, then I'll move forward. Last week, we were looking at a condo, and I just checked with the investor to see if the condo was the association was FHA approved, because that's something that you have to have
yeah,
with FHA loans, right? To know if
yeah,
the whole condominium complex was FHA approved. And he said, well, we're not going to be able to take FHA loans because we've only owned the home for a month.
mm,
So that
mm,
whole pool of buyers has to sit on the fence and hope
yeah,
that they hold the property long enough for it to be FHA eligible or just look elsewhere. And obviously, since it was a renovated investor property, it was very nice. Stuff like that
Mhm.
You know, if you can buy the house with a stronger product, be able to move forward and see that equity come in 12 to 24 months, at that
Yeah.
point, you won't care about the mortgage insurance premium because you got the
Yeah.
home that you want.
Yeah. Yeah. It's interesting you say that, Cedric. I think even in this market right now, um, just because FHA has so many just limitations that you mentioned, from a seller standpoint, a conventional loan could possibly be a little bit more attractive
Absolutely.
in terms of closing quicker, in terms of um, if the properties might not be in best shape, not having to go through those FHA standards. So I'm in completely agreement with you on that.
Yeah, I think when we look back at this, we may find ourselves needing to do a deeper dive on FHA versus conventional because I don't think that's something that we
Yeah.
planned out. So there we go. Okay, so while we're talking about these things, first-time home buyers, that group that
Yeah.
we were talking about before, you don't need 20%. Did you tell me that there's a way to buy a home as a first-time home buyer with less than what is required for FHA?
Yeah, absolutely, absolutely. So, under conventional loan, a first-time home buyer is their privilege is putting down at least as 3%, right? And this is not just for where I am in Maryland. This is for the entire country. Right?
Mm,
So 3% minimum down payment.
that is 17% less than what they've probably been told.
Absolutely.
Yeah,
So for a buyer, that's a lot of cash staying in your pocket. A lot of cash you get to put elsewhere, and maybe some renovations on the back end after you get inside the house. It's money towards your closing costs. Yeah,
yeah, it's a big deal. And you know, if you're talking about, you know, just on a $300,000 home, 0.5% is $1,500, which goes a long way. You know, when you got a an appraisal that costs 450 or $500, you know, you got an inspection that
yeah,
might cost 450, $500. That's already $1,000 right there.
yeah,
And so, you know, those savings will add up. Okay, good to
yeah,
know. So 3%.
yeah.
There's a way for first time home buyers to get a conventional loan for 3% down, 0.5% less than FHA. Got
Absolutely,
it. Got it.
absolutely.
Okay. And then we were talking about, because I mentioned them earlier, the individuals that, because this is a lot of people now, and you know, they have some additional challenges. Individuals that currently own a home, or individuals that have purchased a home before, so they're not first-time home buyers. And you're saying that there's a way they can buy a home without 20% down as well?
Absolutely, absolutely. So repeat buyers was what we call them, and
Mhm.
either lending. I know you all use that term as well. In other words, when you have a home, a current home, right, and you're looking to purchase another primary residency, or if you are looking to sell your current home and purchase another one, you're considered a repeat buyer. What that means is or as far as down payment, you are eligible to put down at least as 5%.
5%.
5%. So a little more than a first-time home buyer, but still certainly less than 20%.
15% less than 20%. Yes, sir. Still
Yeah,
a big deal. Okay. That's
yeah,
good to know. Very good. All right. So got that one out of the way. Now, we keep talking about 20%. Well, let's go ahead and you know, just cover that. So if you do have 20% or you would like to put down 20%, what does that conventional loan look like? What are the benefits there?
sure. So first, no PMI, no private mortgage insurance, right? So depending on the size of the house, that could easily take off somewhere between $150, $170, $175 off your mortgage,
Mhm,
right?
mhm.
Of course, depending on the size of the house, depending on the area, et cetera. What that also does is decrease the schedule, the home. Well, if you're going to do a 30-year loan, that principal interest compared to maybe a 15. Well, I'm sorry, if you was putting on PMI, that mortgage, that principal interest is a lot less, right? And that's usually the bottom line.
Okay, so you're talking about the amount of money that is from the payment that goes towards the principal and interest.
Correct, correct,
Mm,
correct, correct.
gotcha.
Yeah.
Yeah.
So Down payment, I mean, rule of thumb is every $10,000 that you put down is usually about $50 off the mortgage payment. That could be beneficial to a buyer that has some cash. But for someone that doesn't have access to the liquid assets and may want to use those funds for anything else,
Hmm.
paying an extra $50, $100 a month, it may be valuable. It may work for their criteria.
Yeah, I could think of some good things to do with $10,000, but I understand if that's if that's
Yeah,
what people want to do, say $50 a month. Okay,
yeah,
that's good. Now, we covered first-time home buyers. We covered what you call repeat buyers, individuals, home sellers, people that have a home, people that haven't, um, the people that don't have the option to, call themselves first-time home buyers because they've already been through the process, and then those that just have enough cash on hand to do 20%. But
yeah,
there are some people that live in a home right now and in this market, see what the rates are, see what's going on. And, they want to be able to do some additional things just outside of working the 9 to 5 or
oh yeah,
whatever the shift is. People want to invest in real estate. Now, you
yeah,
told me that you have something in the conventional realm for people that want to invest in real estate as well.
yeah, absolutely. So under Fairway, and all banks are different. I want to say that
Yeah,
first.
that's why I want to
Yeah,
ask you about this because it's very difficult for investors to get financing to purchase property.
yeah, yeah. So our company, Fairway, we require a minimum of 15% down for investment property. And let me be clear, investment property, for folks thinking about it, is that when this will not at all, under no circumstances, will this be your primary residency.
Right.
This is strictly for you to place tenants and then receive rental income.
Okay, so this is strictly for buy and hold real estate investment purchases.
Exactly. Exactly.
Gotcha. And 15%,
15%. Still cheaper than 20%.
5% cheaper. And are they looking at private mortgage insurance on that product?
They are. They are. So I mean, they still have about 5% in equity to go on.
Yeah.
And a 30-year loan, that's probably maybe 5 to 6 years, maybe. But
Yes.
still a lot less.
A lot less. And again, if the
Yeah,
annual equity cycle increases continue in the direction that they're going, then maybe
yeah,
it'll be a bit lower than that. And you are putting money into the loan.
yeah,
So as you pay into it, your equity goes up as long as the market stays healthy. So if you want to allocate more, you just want to I think initially you just want to get the freaking house, right?
yes, yes,
You know what I mean? Like you want to lock in and have the opportunity to buy the place for starters. And then what happens after that?
yeah,
That you put as much into it as you can when you can, just manage it properly. Okay. Well, this has been pretty good. Um,
yeah, yeah. This is good. This
I'm
is really
pleased
good.
with what we got here, and I've learned a few things. Definitely, that 5% product, in a very competitive market like this,
Yeah,
is a strong play. And just to kind of echo that a bit more, with you all right now, how quickly can you get to the closing table, get from contract to close with that conventional loan product?
yeah. So just regular purchases, we're recommending, or at least we do 30 days easy.
Sure.
Um, But to be honest, we've been averaging somewhere between 27, 28 days, and we can get it as low as 21 days.
Okay. So if need be,
Yeah,
again, very competitive market,
yeah,
you could get to the table in 3 weeks.
yeah,
Mm,
yeah, yeah, absolutely. We understand. We understand that time is of the essence, and when sellers have over 18, 20 offers,
mm.
this may be the extra hump that a buyer needs to get the job done.
There's a lot of elements to consider. We have some special tools that we use to help people win the
Absolutely.
bidding war. And this is an important one because, the seller just wants to get the most amount of money with the least amount of hassle. It's really that simple. And so any and everything you can do to put them in that position is going to help raise your stake a
Yeah.
bit higher than the other people in the pile. And that's what people got to understand. So being able to do a 3% loan for a first time home buyer with conventional, maybe closing in 21 days, is
Yeah.
huge in this market.
Yeah.
5% for people that have already owned a home is huge in this market.
Yeah.
I think those are some dynamite
Yeah.
gems. I hope that people are able to see this and really share this information with others. So let's just say that now. Hey, like and share. Okay.
Yeah.
That's
Please.
what that's what you're supposed to do. So like the video, share it with other people because folks need to know you have options out here when it comes time to purchase a home, and don't be held back by the restrictions that somebody else told you existed. So I think we've done well. Greg, I know that we were not able to answer everyone's questions and get all the information because everyone's situation is different. Tell folks, how can they reach the mortgage gentleman?
Sure. So I'm on social media pretty heavily. My Instagram is The Mortgage Gentleman. I'm on Facebook at just Greg Lewis, Fairway Independent Mortgage Corporation. Not on Twitter, and that's really about it for now.
Okay, email, anything like that if they want to
Yeah, absolutely. So
do it that way?
email is greg.lewis, that's Lewis, at Fairway, Fairway, M as in Mary, C as in cat.com.
Gotcha. Okay. So we got Instagram, Facebook, and email. Those are the best ways to reach you. We'll go ahead and drop those right there for folks so they can reach
Yeah,
out to you. All right, man. Well, again, thank you for this. I think it's been exceptional. I learned a few things, and we look forward to having you back here so we can dig into some more of these basics on purchasing a home.
awesome. It's been a pleasure. Absolutely.
Okay, man. Take care.